Okay, traders, what's going on, guys? Hope you guys are having an awesome Tuesday. It is the ending of the US session, and wanted to crank out on something for the channel and really for the community that we have. I've been getting a lot of questions from all the members inside of MotiveFX, Top Traders, and I wanted to push something out to you guys and share it with the channel as well. And I want to talk about our strategy, right? And not really our strategy, what we actually do to get in and out of markets, but the principles of creating a strategy overall. So maybe if you can rationalize what a strategy is and how the composition of a strategy exists in terms of its creation, you will learn how to execute better within your strategy. The key metaphor that we like to use in our community is if you don't know how to play chess, you can't create a chess strategy. That's just logic. If I shoot you a chessboard and I throw it across the table from you and you've never played the game in your life, then how are you gonna start creating strategies to beat me, right? And Forex is a game, it's a zero-sum game, right? When you make money, someone's losing money every single time, right? When you lose money, someone's making money. So it is a game. It is a game that you need to be facing an opponent, and you have to have an edge over an opponent, right? And so that's really what a strategy is. Now, strategy sounds like a routine, because it is. When you execute a strategy or you have a trading strategy, you have a routine, you have a breakdown or a model that you say, hey, this is how I execute on a daily basis, on a monthly basis, on a weekly basis, right? So I want to break down to you guys, though, that routine falls apart and the whole strategy itself and the whole business model will fall apart if the strategy isn't rooted in truth. Right? Truth is the reason why you should make money or not. What I mean by truth is I mean by an edge. You have to be making money because you're taking advantage of a certain instance, right? And the best metaphor that I've been using for this lately is, let's say we're playing basketball and there's a 6'5" guy, okay, versus a guy who's maybe 5'11", 5'10". Well, we immediately know what the edge is for this guy who's 6'5". He's taller than him, all right, longer arms. He probably can shoot a better free throw because that's just logistics. It's usually the taller you are, the better you can get something in the basket. You can hit layups better. There's a lot of things that we know immediately that, hey, the edge for this individual is his height and all the different ancillary things that go along with being taller. We know what that immediate edge is, and he needs to take advantage of that, right? So if the 7'4" guy in basketball isn't standing under the rim and he's trying to be a shooter, that's a really bad idea, right? It doesn't make too much sense. That's why Shaq is right underneath the rim, and usually you have Stephen Curry running around on the outside, right? They're using what they have to their advantage. Stephen has handles, right? I'm getting really deep into basketball. Stephen Curry has a lot of handles, right? He has great movement and he has a great shot, right? And then again, so on and so forth. Another edge that maybe you can rationalize simply is Michael Phelps. Michael Phelps' hands are literally in the 99th percentile in terms of hand size. So when he's swimming, he gets to what? Scoop a lot more water. Genetically, he is adept to beating people in the swim game, right? That is his edge. So just as clearly as we can state, and just as clearly as we can find these edges in sports, I'm telling you, the edge in Forex is just as clear, right? So our edge, what we look for in our community is this thing called economic divergence. Everybody on our side knows what that is, and we know how to execute on that really well. And that for us is the breakdown when it comes to saying, hey, on a routine basis, we want to find that. We want to find markets diverging, right? That's our best case of making money consistently. So if you want to start playing in the trading game, if you want to build a strategy that's consistent, the second you start putting into place a strategy that exists upon, again, just random numerical values, like a lot of times folks want to start creating edges around maybe the 38.2 Fibonacci or maybe the 61.8 because they feel like it works the best. We don't really know the routine, or we don't really have a rational model that can show us exactly why the 61.8 is the best. So if you can explain to me the reason why the 61.8 works, besides the fact that you see it hits off a lot on that level, that's not good enough. We need to know the exact edge, the exact reason why you're making money. Other than that, it's really just a shot in the dark. Because as you know, there probably are some market conditions or some variables where the market can align to where the 61.8 doesn't work so well. So what are the exact constraints at which that strategy, if you create a strategy around that Fibonacci level, what are the exact constraints that make that strategy function the way it should, right? And so overall, when you look at a marketplace of buying and selling, things can perceive to be very complicated it because it's the currency markets. And you think things are very convoluted and intricate when in actuality, again, it's just folks buying and selling. I like to dumb it down a lot and rationalize it with our guys as mangoes. Let's say we're just buying and selling mangoes. Well, guess what? If there's a high demand for mangoes, mango prices are going to increase. If there's a low demand for mangoes, and guess what? There's going to be a heavy supply of them and no one's going to want to buy them, which means price is going to decrease. And folks, we could chart that though, right? That's the amazing thing about it. It can have support and resistance. It can have trends. It can have mean divergence. We can see pullbacks. We can see levels where people start buying more mangoes because they saw that past price. There were mangoes in that price area. I mean, we can easily simplify this whole Forex thing by rationalizing a whole nother asset class, and it's the same principles, right? So that's the thing. When you're creating an edge, don't create your edge just surrounding the price itself, right? Price itself may not derive the best edge. We may not be able to pick exactly why we're able to make money on a continuous basis when we're looking at price. We need to know intrinsically as to what is exactly happening in the market itself that is making us, that is giving us the ability to perceive price movements, right? To anticipate a directional move in markets, okay? So our idea of an edge, again, our idea of an edge is to understand and rationalize exactly what's happening in the entire global market system, okay? So if we feel like there's euro weakness that's about to come into play based off of all the different variables that make currency markets move, then we're gonna align ourselves to say, okay, these are the conditions that we like to see met when we're expecting weakness or strength in the currency, and we'll have those conditions, and it'll be a strategy, right? It's like crossing things off. Condition 1, condition 2, condition 3. That's in our game plan. We have 3 conditions for any one currency, whether we're saying that, hey, if these 3 conditions are met, then we can rationalize that this is probable to happen, right? That's what an edge is. An edge is an instance where you have advantage over another person, which means you are more probabilistic to make money in that instance. Well, if you have these conditions, and if you see that these conditions consistently give you an outcome that you expected, well, then you need to play in those conditions for the length of your lifetime, right? And so the last thing I want to mention about edge to help maybe pull it all together is I want to use another metaphor, and this exists within a casino metaphor. Think about a casino. A casino, they're not sitting around, right? You don't have the head guys at the casino sitting around trying to predict what people are trying to do, right? They don't predict things. They already have an edge built into their business model. Anytime one of those gamblers come into a casino, immediately they're going to be operating at a disadvantage. So from the long term, a casino is going to make money. They may be individual days that a casino doesn't make money, right? But they have a very well-founded strategy that allows them to have profits roll in on a consistent basis. It's not because they're trying to, find out who the worst gambler is and just try to get all the money they can out of them. They don't really care about that, right? The example of a head guy at the casino finding the worst gamblers in the entire casino and just getting them to pull all the money out their accounts. The same example there for Forex is you sitting around trying to really find the best trades and hoping that these trades are going to do better than the previous trades, and you're trying to pick the trade when in actuality, you need to let the edge play out, right? If you have an edge, if basically what you do is going to make money because it's just founded in truth, it's founded in probabilities, then at the end of the day, there is no picking the best trade at that given time. The edge is the edge. If you see a setup, you take the setup. You have to let the setups play out. If we have 100 setups and all those setups are within the capacity at which we say our conditions are met, then you should make money, right? But trying to say or trying to figure out which setups are going to give you the most profits, that's where things start to get a little dangerous, okay? Now, there are certain rules and there are certain times where you can have a heightened sense of probability when it comes to certain positions individually, but honestly, it's really important for you guys to first build a system, build a process, build a set of conditions that allows you to have a repeatable process that gives you your original advantage. Whatever it is you're exposing in markets, make sure it's a repeatable process. And the person who refines their edge the best and who doesn't dabble in other capacities and try to figure out other ways to make money in the business, the person who understands their edge the best and who can rationalize and makes it more efficient and understands all the nuances is usually the guy that's going to make the most money long term. All right. The last rule of business, which you guys should just follow in regards to working an edge, is the law of sums. right? The law of sum states that it takes a multitude of data points for us to rationalize if what we're doing is working or not, right? So we're not trying to pick to see if our strategy is working off of 1 or 2 trades, off of 10 trades. If we look at 50, 60, 70, 80 trades and we see profitability, then our strategy is probably working, okay? So don't try to rationalize an edge with a small sum of positions. Have a larger sum of positions. Immediately, the fact that you need a larger sum of positions means you shouldn't be trying to cherry pick the trades that are going to be amazing and the trades that are going to be bad. If a trade is within your edge and meets your conditions, play it out. At the end of the day, if your strategy works, out of 100 instances, out of 50 instances probably, even out of 30 instances, you'll probably be making money. And then you just continue that process. You learn to maximize profits with the edge. You learn to minimize losses. And then you can start applying different principles like the Kelly principle, something we'll be talking about later down the line, to start showing you how you can take advantage of certain moves, right? To take it so that you can make that 1% trade where you're looking to profit, right? And turn that into a trade where you maybe gross 2%, 3%, 4%, 5%, right? Because you're allowing it to play out and maximize profits. That's something that's really important as well, right? So guys, look, when you're playing out an edge, when you're looking to create a strategy, make sure you're creating an edge and make sure it's a systematic process that is founded in truth, that is founded in a deliberate and intentional and known advantage that you have over the business. You're 6'5", the market's 5'10", you know why you're able to beat them, okay? If you don't have that, then you're in a lot of trouble. Make sure you can back test, figure it all out, and you're gonna be doing great, okay? So guys, let me know if you have any questions, comment down below. More about edge, more about strategy creation. I wanna crank out on more videos in this capacity. Like the video for your boy, I appreciate it. I'll talk to you guys tomorrow.